A very good day to all of you. Today we'll be revising IND AS 38 Intangible Assets. Before we get into the revision, it is advised that you complete the revision of IND AS 16 as IND AS 40 and IND AS 38 Intangible Assets. 80% of the principles will be similar to that of 16. So once you're done with 16, 40 and 38 becomes much more easier, right? So as I have already informed, the objective of this video series is to give you a pilot view of the entire standard, and for this purpose, we have divided the various principles of these standards into concepts. So without any further delay, let's get into the revision. So the first concept that you need to learn in the chapter Intangible Assets in the AS 38 is the meaning of intangible asset under the standard, right? As per the standard, intangible assets are those assets that has no physical substance, right? Obviously, that is why they are known as intangibles, because if they were tangibles, they already have existing two standards, that is PPE, that is IND AS 16, and in case of inventories, you have IND AS 2, right? So the main characteristics of an asset to be covered under IND AS 38 intangibles is that it should have no physical substance. It should have no physical substance. And the second point is that there should be an existence of future economic benefit, right? Obviously, if I'm having an intangible asset itself, what is my objective? To have a probable future economic benefit out of it. And the entity should have control over the future economic benefit. And the entity should have control over that future economic benefit. Now, what do you mean by control over the future economic benefit? The standard very clearly clarifies that also. The standard says when it means control over the future economic benefit, it says that the entity should have the power to obtain the benefit from that particular intangible asset. The entity should have the power to obtain benefits from that intangible asset, and the entity should also have the ability to restrict others from taking any benefit from that particular intangible asset. The entity should not only have benefit, not only have the power to take benefits from that particular intangible asset, but it should also have the ability to restrict others from taking benefit from that particular intangible asset. So only when you have the power to take advantage of that asset and the power to restrict others from taking advantage, we'll say that you have control over the future economic benefit of that particular intangible asset, right? And the third point, the standard says that the asset, intangible asset, should be identifiable. Should be identifiable. What do you mean by identifiable? It should be separable and transferable. That is why we'll be reading further what and all are not covered under intangible assets, right? In the S38. In that, you will see that market share cannot be classified as an intangible asset because it is not identifiable. Now, if I am telling that I have 30% market, let's say I'm in manufacturing electronics, I say I have 30% market. Can you identify that? Is it separately identifiable? No, it is not determinable, right? So in that case, I cannot consider my market share as an intangible asset, right? So your intangible asset should be identifiable. And what do I mean by identifiable? You should be able to separate it. It should be separable and transferable. Like, let's suppose I can say franchisee is an intangible asset because I can transfer my franchisee that I have. Let's suppose I have a franchisee of McDonald's. Now I can transfer this franchisee of McDonald's to some other person, right? So it is transferable, it is separable. So in that case, we'll say that particular intangible asset is identifiable. So in order to for an asset to be classified as intangible asset under IND AS 38, it first point, intangible asset means it should have no physical substance, right? Second point, there should be existence of future economic benefit, and also I should have control over the future economic benefit. What do you mean by control over the future economic benefit? I should have the power to obtain benefits from that particular intangible asset and also restrict others from gaining any benefit from that particular intangible asset, right? Then I'll say that I have control over the future economic benefit. And the third point, the standard says that it should be identifiable. What do you mean by identifiable? It should be separable and transferable. It should be separable and transferable individually, or it should arise out of a contract, right? So that is the first concept, right? I hope the definition and the scope. So definition clearly states the scope of the standard. Next comes the sub concept under that itself. The following assets that are not covered under intangible, that is not covered, but that is not under the scope of this standard. The first is the staff training program that is being conducted. right? You're training your staff and you give them some intellectual, right? You give them some kind of knowledge, right? Now, can I classify that knowledge? Can I put that knowledge as an intangible asset? The standard says no, it cannot be considered as an intangible asset. The very simple answer to that being because the entity has no control over the particular employees and the staff can leave at any time, right? The control is not there, right? The standard very clearly says you should have control over the future economic benefits. Now, even if I've given that staff training program to them, but I cannot control that they will not leave the entity tomorrow, right? You cannot give an assurance. They might leave the entity tomorrow or day after. So you do not have a control over the future economic benefit. Hence, this cannot be classified as an intangible asset. Similarly, marketing and advertising expenditure. As the future economic benefit from such a cost is uncertain, right? It is very uncertain. I cannot tell it because of advertisement. See, doing an advertisement or a marketing, you cannot be 100% sure that you will get a response from the customers, right? They might not even respond to your product, even though you have spent a lot in your advertisement and marketing, right? You have seen a lot of companies who have spent huge of their initial capital into advertisement, but they have not really boomed well, right? So that is also possible. So what is not why this cannot be classified as an intangible asset is because there is no certainty of future economic benefit. There is no certainty of future economic benefit, and we say that if you again look at the definition, there should be existence of future economic benefit. The second point says there should be existence of future economic benefit, and in this case I don't have certainty, so I cannot classify that as an intangible asset, right? Next comes the third point, market share. Market share already I discussed while discussing the definition also, that it is not identifiable, right? You cannot separately identify that this is my market share. I can say, but you cannot ascertain it somewhere very surely. So that is the reason why market share will not be covered under intangible asset. Similarly, cash amount that is being paid to such skilled employees, since the entity has no control over them, right? And they can leave at any time. But this has an exception. If you give them a particular training and you sign a contract with them saying that after you have attained this training, you should not leave my organization and go, right? At least for 2 years, you should serve here so that I can take out the expenditure that I've spent on you on giving this particular skill. So in that case, in case you have a particular agreement with them, right? And according to that agreement, they have to work for a certain period. According to the contract, they have to work for a certain period. Then at that time, yes, this particular thing can be classified as an intangible asset because what is there? There is certainty, because there is what? Certainty that you will get future economic benefit out of it, right? So I hope this point is also clear. The following which are not covered in the intangible asset, the last they say it is not covered in case cash is paid, but there's an exception. In case there's a clear contract which says that you have to serve for a particular period, then yes, there's certainty of future economic benefit, then it can be classified under intangible assets, right? Now let's read. There's a guidance note on treatment of asset that incorporates both tangible as well as intangible element, how it should be treated, whether it should be treated under IND AS 38 or whether it should be treated under IND AS 16. Now the entity must the entity must ascertain which element is significant here. What should the element, what does the entity ascertain? Which element is more significant here? Two examples given here. Let's look at them to get more clarity. The first says that you have purchased a software which is comprised in a CD. So you have purchased a software which is present in what? A CD, right? Now, what was your aim behind purchasing? Your aim was to obtain the software or the CD? Obviously, the software. So what is more significant? The software is more significant. So this is obviously what? An intangible asset, because the CD is just a medium to bring that software to you, right? So the CD wasn't significant. What was more significant? The software which was comprised in that particular CD was more significant. So hence, this particular software in a CD will be classified under what? Intangible asset in their 38. Similarly, a computer that is purchased that incorporates a software. So your aim here was to purchase a computer. The computer comes with an inbuilt software, has nothing to do with the computer as such, right? What was the aim of purchasing a computer? So here, what is most significant? What does the standard say? Says look at the element which is most significant, whether the most significant is the tangible portion or the intangible portion. In my second example, computer, the tangible portion is more significant, hence I will classify it as PP under IND AS 16, right? So the standard says when you have both the elements, the tangible as well as the intangible asset in an intangible element in an asset, you have to check for most significant element, right? And accordingly, the standard IND AS 38 or IND AS 16 will apply to them, right? I hope this note is also clear. So the concept one was all about the scope, the definition of intangible assets under Ind AS 38 and what and all are not covered under Ind AS 38, and then also we looked at a special guidance note that was given. Now with that, let's move to the concept number 2, which is recognition criteria under Ind AS 38. As I told you, once you have completed Ind AS 16, a lot of principles will repeat in Ind AS 38 as well. Similarly, the recognition criteria is very much similar to that of Ind AS 16. It says again there are just two conditions. First condition is look whether you have a probable future economic benefit. Look whether you have a probable future economic benefit. And second, whether the cost can be reliably measured. Whether the cost can be reliably measured. If both, it's an and situation, right? Both should be satisfied. If you are able to satisfy both the conditions, then of course you can recognize the assets in your book. The asset can be recognized in your books, right? So recognition criteria same as in the 16, no change at all. Moving on to the concept number 3, which is the initial recognition. Now, of course, your let's say your intangible asset has satisfied the recognition criteria under Ind AS 38. You will move on to what? The initial recognition. The first time recognizing this intangible asset in my book. This concept also is very much similar to that of Ind AS 16. It also has 4 cases, right? The first case, let's look. In case the tangible, it's an intangible asset, sorry. In case the intangible asset is purchased or internally generated, all this area, that should be intangible asset. Right? In case the intangible asset is purchased or internally generated, then how will you do the initial recognition? Case number 1. Case number 2, in case that particular intangible asset is acquired on deferred settlement basis. I already explained the meaning of deferred settlement in Ind AS 16 also. Let me repeat it. Deferred settlement. From the word itself, you can identify the meaning. The settlement is being deferred. The settlement is delayed. It is paid in installments, right? Deferred settlement basis if you are acquiring an intangible asset. Or third, in case the intangible asset is acquired on exchange of other assets, right? You're exchanging some intangible asset and in return getting some intangible assets. Some exchange transaction is happening and from that you are getting an intangible asset. If goodwill is acquired on business combination, when business combination is happening, goodwill is being acquired, this will specifically be dealt in Ind AS 103. Right, so I'll not be going in detail for this 4th point because it will be in detail dealt in Ind AS 103, right? Now let's look at each case. First case, in case the intangible asset is purchased or internally generated, intangible asset initially will be recognized at cost. It will be initially recognized at cost. And when I say cost, it includes all the directly attributable cost which is used to bring that asset to the intended condition by the management. Whatever directly attributable costs are being incurred to bring that particular intangible asset to the condition which was intended by the management, all the cost will be included in the cost of the intangible asset. Now, what and all are not included in the cost of the intangible asset, also very much similar to Ind AS 16, as we discussed there. Cost of advertisement and promotion, you will not be including. Cost of staff training, as I told you, cost of staff training will not be included. None of the operating losses will be included. And if you have purchased any maintenance contract for that intangible asset, that will also not be included. Research phase expense, we'll be dealing in detail. We'll be discussing after this research phase and development phase in case the asset is internally generated. So that point you will get more clarity there. Right? Startup cost, as we have already discussed in the 16, initial cost, the startup cost will not be included. Cost of conducting any conference that was for the launch of that particular intangible asset or for, let's say, inauguration, such expenditure, opening ceremony, you are conducting something, such cost will not be included. Subsequent cost of intangible asset, that is annual fees or royalty, will not be included. Any cash discount was received, or a cash discount is nothing but an early settlement discount was received, that will also not be included. In case loan was taken to purchase that internally generated intangible asset, then unless it is covered by Ind AS 23, otherwise that particular interest for that loan will not be included. Ind AS 23 deals specifically with borrowing costs, so you will see that particular standard, and if it is not covered under Ind AS 23, then the interest cost will not be added to the cost of the intangible asset, right? Now, a very important concept in this chapter is this concept. So pay a little attention to this, which says internally generated intangible asset except goodwill. If you accept goodwill, if you have any other internally generated intangible asset, they will actually be 2 phases to that particular developing that particular asset. The first will be the research phase. First will be what? The research phase. In research phase, what you will do? planned and original investigation will be conducted to gain new scientific knowledge, right? You're just trying to come up with something. Let's say you're trying to find out a vaccine for the COVID virus, right? So the first stage is what? The research stage. You're trying to gain some knowledge, right? What is, what is the particular formulation that you should come up with that can fight against this virus? The various, the virus will keep mutating. So with the mutation, your medicine should also be able to react, right? So such formulation, you're trying to gain knowledge about that, and you're trying to come up with something. So the initial stage, the planning and the investigation, where you're trying to gain any new knowledge, is what we call the research phase. And in research phase, any expenditure that is being incurred will be not recognized as intangible asset, and it will be taken to P&L. It will be taken to P&L. Why? Because in the research stage, you cannot ascertain whether some material thing is going to come out of it, right? Some concrete thing is going to come out of it. What do I mean by that? Let's say you have done research for 2 years, but then you go back to your management and you tell that no, there cannot be any formulation that is going to cure this particular virus. Like, let's say some type of cancer, right? There is no particular formulation that we could develop, right? We did a lot of research, we tried to investigate a lot, we tried to go through a lot of this and gain knowledge, but there was no particular formulation that came out. So for the 2 years, whatever research expenditure you have taken, it is all vain, right? You cannot classify that as an intangible asset because nothing concrete has come out of it. So that is why the standard very clearly says, until you are in the research phase, right, until you are only gaining knowledge, you are planning, right, nothing concrete has come out. Whatever expenditure you incur, that will be directly taken to your P&L. That will be directly taken to your P&L. But then next comes the development phase. Then next comes the development phase, where the application of the research findings can be put to develop an intangible asset. Whatever you have gained knowledge from that research phase can be now put into action, and some concrete thing can be developed out of it. Some concrete thing can be developed out of it. The development phase starts after the establishment of technical feasibility and regularity approval. Technical feasibility and regularity approval. Let's say you have developed a formulation, right? Let's say if a medicine is being, developed in this particular formulation, you feel that it can cure that particular cancer very easily. But what happens is, to develop that particular medicine, you need a very extreme temperature. You need a very extreme temperature in which that particular medicine should be processed. But let's say minus 1 lakh degree or something like that, right? A very extreme temperature, but you do not right now have the technical feasibility. Like, let's say the maximum temperature that you can process anything in is, let's say, minus 10,000 degrees Celsius. But for your formulation to work out, you need minus 1 lakh degrees Celsius, right? So the technical feasibility. So though on the research phase you came up with some formulation which, if turned, will be if turned into an intangible asset, will be will be concrete, but still the technical feasibility is not there, right? You do not have a machine or any such technical advancement that it can process that machine under 1 lakh degrees Celsius, right? That is not at all possible. So in that case, though you have a concrete research, can your research turn into a development phase? No, because there's no technical feasibility. Similarly, it is important to get the regulatory approval. If regulatory approval is also not there, then you cannot say that you are into development phase. So two important conditions for the development phase to start is that whatever you have done in the research phase should be technically feasible. I can't tell you can do this, that, but there's no technical advancement is still available with me, right? So then whatever you are planning is not going to turn into action anyways. So the development state, the standard very clearly says that the development state will begin only when the technical feasibility and regularity approval is being obtained. Only when the technical feasibility and regularity regulatory approval is being obtained, right? And the expense that is incurred in this development phase is recognized as intangible asset. And now whatever expenses you're going to incur in the development phase can be recognized as an intangible asset. So whenever you are developing any internally generated intangible asset is being developed, okay, except for Goodwill, first there will be two stages. The first stage will be called the research stage, where you're only planning and trying to gain knowledge and investigating about that particular intangible asset, whatever you want to develop. And whatever expenditure you incur during that phase will be directly taken to your P&L and will not be recognized as an intangible asset. But once your research phase is over and you move to the development phase, and when will the development phase begin? When technical feasibility is being established and regulatory approval has been obtained, your development stage will begin. And once you reach the development stage, whatever expenses you incur there onwards will be recognized as an intangible asset, will be recognized as intangible assets, right? Next is internally generated brands, mastheads, publishing titles, goodwill are not recognized as intangible assets since their cost cannot be measured reliably. As I already told you, to recognize what is important, cost should be reliably measured and there should be probable future economic benefit. But for this brands, mastheads, goodwill, you cannot reliably measure the cost. Hence, they will not be recognized as an intangible asset. If the research project is acquired on business combination, then the expense on research phase is recognized as an intangible asset at fair value. At what? Fair value. This is very, it makes sense, right? Whenever I'm acquiring an intangible asset on the research phase through business combination, at that time, yes, that research phase expenditure will be recognized as an intangible asset at fair value, right? So that was all about internally generated intangible assets, right? And purchased intangible assets, how we will recognize them. Next is the concept of intangible asset that is acquired on deferred settlement basis. Again, the same principle of IND AS 16 will completely repeat here. In case, first of all, what is deferred settlement? Deferred settlement means that the payment is being made beyond the normal purchase price or credit terms, right? The payment is being deferred. They are installments. So in that case, what will happen? One will be the normal purchase price, and there will be some excess amount that you will be paying. That is nothing but your interest cost. Your finance cost. And that finance cost will be taken where? It will be taken to P&L. We have discussed this in detail in IND AS 16, right? So I'm not going again in detail, but I hope you know all of these points as well, right? So the treatment remains same as IND AS 16. As intangible assets are acquired on deferred settlement basis. Next is intangible asset that is acquired on exchange basis. Again, same as IND AS 16. So let me go to the notes of IND AS 16. Of course, here instead of intangible assets, instead of PP, intangible assets will come. But of course, the concept remains the same. Whenever in exchange basis, you are acquiring the intangible assets, first you will see whether the transaction has a commercial substance or the transaction does not have a commercial substance. Now, what do you mean by commercial substance? Last time itself, I explained you. Commercial substance refers to any economic activity that affects the cash flow of an entity. If any economic activity is affecting the cash flow of that entity, then that economic activity will have commercial substance. So the first thing that you will check in case of exchange is whether that exchange transaction has a commercial substance or not. If it has a commercial substance, then the intangible asset acquired will be recognized in the following order. First, you will see whether you are able to find out the fair value of the asset acquired. And second, you will see whether you are able to find out the fair value of the asset given up. If both cannot be determined, then you will go with the carrying amount of the asset that is being given up. This is in case the transaction has a commercial substance. But let's suppose the transaction lacks a commercial substance. What you will do in that case, if the transaction lacks a commercial substance, of course, then you will go with the carrying amount of the asset that is being given up. Right? This is absolutely, as you can see, I am referring the notes of IND AS 16 only. The principle remains the same for IND AS 38 intangibles as well, right? Exchange remains the same as IND AS 16. Now next, in case goodwill is acquired on business combination, as I told earlier, this will be in detail covered in IND AS 103. So I'm not repeating that point here. I'm not discussing it here. So once we go to the standard IND AS 103, it will be explained in detail there, right? So that was the first three concepts of. First, we saw the applicability and the scope of the standard, right? Then we saw some guidance note given on when the asset has both the tangible and the intangible element. Then we saw the recognition criteria. Then we saw the initial recognition criteria under 4 different cases. Now coming to the subsequent recognition of intangible on balance sheet date. Subsequent recognition of intangible on balance sheet date. The intangible asset can be shown either on cost or revaluation model. The intangible asset can be shown on either cost or revaluation model. But once you have chosen a policy, that policy will apply to the entire class of asset, right? And you know what is the cost model? The cost model is nothing but cost less the accumulated depreciation less the accumulated impairment loss. And what is the revaluation model? You determine the fair value of the asset on the date of revaluation, and in case revaluation method is being followed, the amortization that will be applied on that particular intangible asset will be calculated on that revalued amount in the future. Right? Again, same as IND AS 16. As I told you, once IND AS 16 is done, 40 and 38 are mostly taken care of. The concepts keep repeating. Concept number 5, amortization of intangible assets, right? Amortization of intangible asset. Amortization Amortization of intangible asset will begin when the asset is ready for use or not, and not when the asset is put to use. So once the asset is ready for use itself, what will apply? Amortization will apply for them. And amortization on asset will cease. Amortization on asset will cease when the asset is being either derecognized, that is the asset is being sold, or it is being classified as held for sale under Ind AS 105. It is being classified as held for sale under Ind AS 105. Under these two situations, what will happen? The asset ceases to depreciate, it ceases to amortize, right? And what are the various methods of amortization that are present? You have the straight line method, you have the diminishing or the reducing balance method, you have the diminishing or the reducing balance method, and you have the units of production method, and as per in this 8, annually what you should do, you should review whatever amortization method is being applied. What is the residual value, right? In case there's any residual value, in case there's in case of useful life, whether the useful life is appropriate. So annually this review should be done, and in case there's any change you want to do, it should be changed accordingly, right? And amortization, which method to apply, whether straight line, whether diminishing, or whether the units of production, the standard says that whichever amortization method you apply, it should reflect the pattern in which the future economic benefit of that particular intangible asset is expected to flow to the entity. What should your amortization method reflect? It should reflect the pattern in which the future economic benefit is going to flow to the entity, right? Next, very important point here, it is a special point, right, which you would have not seen in PPE. The standard says that amortization method can also be based on revenue. So amortization method based on revenue is something that you would have not seen in their 16. So the standard says yes, this is something that you will very rarely use, you will not find it very commonly, but the standard says yes, amortization can be based on revenue if it is applicable only on rare cases. The standard itself says few times it's applicable only if the revenue is the limiting factor. If the limiting factor is the revenue, right? So if the revenue is going to restrict you from using that intangible asset, like let's say up till you reach 100 crores, then revenue can be taken as a medium for amortization. A very common illustration that you will find in your ICI is the to operate toll services up to specific revenue. Let's say from government you have taken, so the government says up to 100 crores you can operate the toll services, right? So then up to 100 crores, so what is the limiting factor for you for using that intangible asset? 100 crores revenue, right? So then the standard says yes, then your amortization can be based on revenue. This was a special note, right? Again, next we have two important notes. In case of finite useful life, in case your asset has a finite useful life, your amortized on systematic basis over the useful life. So then you will amortize based on the useful life. If 10 years is the useful life, the amortization will be taking place proportionately for 10 years, right? But in case your intangible asset has an indefinite useful life, then obviously you cannot amortize. So then amortization will not be there, but you will always check for impairment. Under Ind AS 36. What you will check for? Impairment under Ind AS 36, right? I hope that is very, very clear. Now, moving on to concept number 6, residual value. The residual value of an intangible asset is usually zero. It is zero in most cases, right? Obviously, intangible assets residual value, if we see patents, franchises, all these residual value mostly will be zero in most cases. But there are some exceptions. Let's look at those exceptions. There is a commitment from a third party to purchase the asset at the end of its useful life. A third party says that at the end of the useful life, yes, I will purchase that asset. There's a commitment. In that case, yes, residual value can be determined. In that case, yes, you can have a residual value, or there's an active market available for that particular intangible asset, and it is probable that such market will even exist at the time the asset's useful life is over. So even after the asset's useful life is over, such active market will exist for that asset. In that case also, the residual value may exist. So residual value mostly in case of intangible assets remains zero, but in some cases that you can have a residual value. What is the first case? In case there's a commitment by a third party that he will purchase your intangible asset at the end of its useful life, or there's an active market for your intangible asset, and it is probable, you are expecting that this active market will even remain after the end of the useful life of the asset. In such a scenario, residual value may exist. In case the residual value, so that is all about that. Now let's come to the special note. In case your residual value is exceeding your carrying amount, obviously what you will not do, the asset will not be amortized. right? The amortization value will be 0. The amortization value will be 0. It makes sense, right? Your residual value is greater than your carrying amount, so you will not amortize the asset, right? Moving on to concept number 7, useful life of intangible asset. Useful life of intangible asset, in case the useful life is infinite. In case the useful life is infinite, obviously then that intangible asset cannot be amortized, but you will check. We have already discussed this, right? But you will check for what? You will check for impairment under Ind AS 36. Annually, what you will check for? Impairment you will check, because amortization cannot be done since the infinite life, since the asset has an infinite life. Since the asset has an infinite life, and in case the asset has an finite life, you can definitely amortize the asset. The asset can be amortized, right? Next, moving on to the important note, the useful life of the asset should not exceed the contract period. The useful life cannot exceed the contract period. However, it can be less than the contract period. That is possible. However, it may be shorter depending on the period over which the entity expects to use the asset. It can be less than the contract period, but your useful life cannot exceed, right? The second important point, in case the intangible asset is renewable, in case the intangible asset is renewable, can the use, let's say the asset is going to be used for 10 years, okay, the useful life of the asset is finite and it is 10 years, and you have an option at the end of this 10 years, you can renew it for another 5 years. You can renew that intangible asset for another 5 years. Now we are asking the standard whether my useful life should be 10 years or 15 years. Because I have the option to renew it, right? So whether my useful life should be 10 years or 15 years, the standard says that the useful life can include the renewal period also, in case two conditions are satisfied. In case these two conditions are satisfied. What are these two conditions? Let's see. There is a supportive evidence that the contract will be renewed, right? You have evidence that after 10 years, you will renew that particular contract. If that supportive evidence is there, then yes, the standard says, then yes, you can include it. Then the renewal period can also be included. And any conditions which are necessary to obtain the renewal after 10 years, it says, let's say some conditions like based on revenue, some condition is being placed, and that condition will be satisfied. You have an assurity that that condition will be satisfied, and cost of renewal is very insignificant. Cost of renewal is very insignificant compared to the future economic benefits that will flow. Then you can include the renewal period. So can the renewal period be included to the life of the asset? In case of infinite life, the standard says look for 2 points. First is whether there's a supportive evidence that in the future the intangible asset will be renewed, and whether is there any condition which is necessary to be satisfied, and if there is any condition, will it be satisfied? If there is any condition, will it be satisfied, and whether the cost of renewal is insignificant when compared to the future economic benefit that will flow from that particular intangible asset. If these two conditions are satisfied, then the renewal period can be also included. Then the renewal period can also be included, right? Now, next, the concept number 8, the retirement or disposal of intangible asset. Intangible asset is derecognized on its disposal when it is being disposed, or when there is no future economic benefit from that intangible asset. When there's no further future economic benefit, because in applicability itself, you saw that one important condition was future economic benefit should flow, right? And you should have control over that future economic benefit. So once either you're derecognizing the asset or the future economic benefit from that asset ceases, you will dispose of the asset. The asset's retirement or disposal will be done. And in that case, whenever the asset is being sold, right, the net sales less the carrying amount will give you the gain or loss from that particular transaction. It will give you the gain or loss from that particular sale transaction, right? So these were all the important concepts that you need to know in Ind AS 38. Right, we would recommend you to go ahead and solve the illustrations of ISM also, which will give you a lot of control over the standard. And if you want to download these notes, they are available in the description. You can download them. Thank you so much.